Welcome to FOMO Consulting for your daily AMC stock analysis video on Tuesday, June 29th. Ladies and gentlemen, there is no escape for the shorts, absolutely none. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. Thank you, as always, to each and every one of you who has liked, shared, commented, and subscribed. It means the world to me. Thank you very much. Let's start with a quote. Those that recognize the inevitability of change benefit the most from it. I certainly believe we have made change. We are continuing to make change. And through that change, I believe we will benefit through the squeeze, through the rising stock price of AMC, and through the recovery of the company itself. So let's look at the broader market. Overall, not the best day, not the worst of days. Some of the tech did decently, but overall, pretty flat day. But what I want you to pay most attention to is the S&P, the Dow, and the Russell. If you look at the charts above, so S&P closed up 1 point, Dow up 9, Nasdaq up 27, and the Russell was down 13. So we're going to get into that very shortly, why that's important. But overall, the broader market pretty well had a flat day. Let's look at crypto. Overall, crypto is up today in general, doing quite well. I believe that's 2 days in a row now, so that's very, very promising. Congratulations if you're in any of these coins. Always fun to look at pre-timing for AMC. Certainly very bullish, a little less bullish than it was yesterday, but overall, I'll take it. Well done, German apes. You had a volatile day just like us. Ran up, got shorted down, tied to the broader market. We'll get into that very shortly, but overall, well done, closing at $48, down 1.03%. No sweat, right? So let's look at AMC. How did we do today? So overall, we closed at $56.43, down $1.68 or 2.89%. No big deal. Up after hours about a quarter. Overall, if you look at this chart, obviously pre-market was relatively flat. Then we started kind of running up, had the usual pump at the opening, and then we just pretty much bled down for the better part of the day, albeit very slowly. But we did have a recovery, obviously, in power hour, as is typical, and then we consolidated close. So overall, I feel very, very positive about the day. And more specifically, if you look at the Russell chart from the day, we bled down exactly with the Russell. We are tied to that. And if you look here at the S&P, the Dow, and the Russell, it pretty well mirrors the AMC chart. Obviously, on lower volume, it was easier to pull us down. No doubt the shorts took advantage of the weakness in the overall market. So overall, in my opinion, no big deal. So this is IWM, the ETF with the most weighting with AMC, the most shares. As you can see, our chart mirrored it almost to a T, and more specifically around that 2 to 3 o'clock range, that heavy sell-off that we saw in the AMC chart mirrors this as well. So let's look at a little bit bigger picture here. At the 1 hour chart, we have just been consolidating. As you know, the $60 level is essential. The $50 floor, we've just been bouncing around this channel now for about 3 weeks. But probably, in my opinion, the most bullish aspect of this is we've spent the majority of our time above the $55 level. So we're closer to that 60 level than we are to the 50 because we've been hanging around the upper part of that channel. And I believe we are poised for a breakout in the next 2 to 3 days. So let's look at the hourly chart again. $60 level. You can clearly see the MACD and RSI. MACD has just been in a consolidation mode. RSI is down in neutral. We are poised for a big, big breakout, a lot of room to run. I am feeling very, very bullish. So what I want you to look here is on the daily chart. So leading up to the big run we had in late May, early June, volumes fell off substantially. If you recall, going back looking through the data, we had one day, I believe the lowest day was about 16 million in total volume on that day. So it just bled down. If you look at the RSI level before that and the volume and the MACD was flat. RSI down around the 60 level. Well, lo and behold, there we are. So again, volumes are falling off. As we all know, RSI is about the same level. I believe we are poised for a big breakout. We all have seen this, certainly in the bull flag channel. I believe we are about 2 days from a breakout. We could break out tomorrow, but more importantly, when we have a breakout up or down, we need to have a follow through. We need to have high levels of volume. It doesn't have to be, 500 million or anything, but a very strong volume bar to prove that it was a true breakout, either up or down, would designate that. If it's on lower volume, it is likely a fake out. So let's look at GME. Overall, GME has just been somewhat of a similar pattern, just kind of hanging around, consolidating. Closed at $210 today, down $2.37. No sweat. Again, it's just been in that consolidation, but GME looks poised for a major run over the next week or so. That MACD is starting to kind of swing around a little bit. The RSI is just hanging in that neutral channel. One little catalyst, and it's going to break out, and that is very good for AMC as well. So big news today, AMC was designated on the NYSE as a threshold security. Looking at this particular article, yesterday the tokenist reported on another tie-in to the Great Short Squeeze saga. Both TD Ameritrade and Schwab Brokers announced their increased margin trading requirements to reduce the risk for themselves and for traders who wish to engage in the trading of the two mega shorted stocks, GME and AMC. As these stocks already drained $12 billion from hedge funds, all market players are fortifying their financial walls. Keeping in mind that the hedge funds would not have to cover these FTDs, but the prime brokers. But overall, this is very bullish. We'll see what happens. No doubt there'll be a lot of due diligence around this. Kind of caught some people by surprise, but as I understand it, prime brokers are on the hook. And we'll see what 7 to 13 days out looks like, which could be within the next week or so. So more good news. AMC withdrawals Form S3, originally filed in December 2018. As I understand it, this basically withdrawal would take dilution off the table, at least for this year anyway. It may be linked, obviously, to the upcoming shareholder meeting. So overall, I'll continue to do some due diligence, as I'm sure you will, but I believe this is a bullish catalyst. And as always, the Motley Fool has a fantastic article about AMC being manipulated, but not by Wall Street, of course. So as you read down through the article and get a good laugh, you'll find on their disclosure statement one very interesting comment at the bottom of the article. Investors communicating with investors. The Motley Fool is a company that represents investors teaching and learning from other investors. Sounds like something we're doing, right? Educating and teaching one another. So let's look at the overall short interest. So as you can see, this was yesterday's data. We were about 19% short interest of free float. Utilization was 86%, and cost to borrow about 2%. And shares on low were 97, close to 98 million. Let's see what today looks like. So now we are at 99 million on shares on loan. Cost to borrow is about the same. Utilization 86%. And the short interest percent of free float is at 19.21%. And they borrowed 4.66 million shares, returned 3.38 for a net borrow of 1.28. So overall, again, they just keep digging the hole just a little bit deeper each and every day. We have 433 institutional buyers, 393 are long whales, and I believe they are getting tired of dealing with these short attacks. I truly believe they are just waiting on the right moment, quite frankly, to strike, because I am sure they want to make money too. Total volume today was 62 million. Shares available according to Fintel, 1 million. Fee is 1.24%. So this was yesterday's data for the short interest trend line data, as you can see. So let's look at the basically the own loan average age for the shorts. It has gone from 31 now up to 33, which means new shorts are entering their position, and the data would show that. And here is the short interest trend data, as you can see, certainly increasing each and every day because they like to short AMC for some ungodly reason. Let's look at the options. So overall, we know where we're at. The battlefield has been drawn. 60, 65, 70, all of those levels are very. So overall, the bullish sentiment has increased today. Calls versus puts 2.2 to 1. Certainly very, very bullish. Volume was down just like the rest of AMC today, 613,000. Net premiums were down today. But overall, if you look at the calls, a lot of 60s and 65s expiring this week and next week. Certainly very, very bullish. And then some big trades on the put side, obviously to ride it down or hedging, what have you. And as always, I've got skin in the game. I bled down just like you today, but I am more confident than ever in the near future about a technical breakout, a hidden bullish divergence, the bull pennant, you name it, I'm in. So let's close with a quote. I was reminded today my blood type is B positive. So as always, I want to thank you all for watching. If you found the video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. But as always, I hope your life is full of green candles, and I will talk to you soon. Take care.